It's the One of a Kind Financial Show Daily, and I'm Mike Milligan, your host. I'm a certified financial planner, the founder of One Oak Financial, the podcast host of Ideas by Mike, and have a weekend radio show called the One of a Kind Financial Show. Yesterday, July 28th, the market split in two. Old economy stocks like Coca-Cola and Boeing pulled the Dow higher, and semiconductor stocks pulled the Nasdaq lower. Under the hood, the American consumer is stressed. Artificial intelligence is stressed, and the Federal Reserve is deciding at 2 o'clock this afternoon whether to add to the pressure or take some off. And I checked Google this morning to see what everyday people are actually searching for, and the list tells us where the real anxiety lives. Educate, coach, plan. Never miss a moment. Let's go.
Be one of a kind with Mike's plan.
At the closing bell on Tuesday, July 28th, the split market showed up on the scoreboard. The Dow Jones Industrial Average had another strong day. The S&P 500 finished essentially flat. S&P was up 15 points. Nasdaq was down 0.22%, and the Russell 2000 was up 0.2%, those small caps. So three of the four major indexes up for the day. Then under the surface, that flat S&P number hid some huge moves. Micron Technology, remember them from about 2 weeks ago on the One of a Kind Financial Show Daily? That company fell more than 6%. Intel dropped 5%. Nvidia was off 1%. Taiwan Semiconductor and SK Hynix, the Korean memory chip maker, also fell. The concern is the same one we talked about on Monday. Investors are questioning whether the hundreds of billions of dollars the biggest AI companies are spending on data centers, chips, and infrastructure is going to earn a return. When Alphabet reported last Wednesday and raised its CapEx guidance to $195 to $205 billion for 2026, its stock fell 7% the next day. The same nervousness is not getting priced into every chip maker on the way into the Microsoft, Meta, Apple, Amazon reports later this week. But on the other side of the market, the rotation trade is very real. Coca-Cola reported before the open and beat every number Wall Street was looking for. UPS also beat and raised guidance. Boeing beat on free cash flow. Remember yesterday's One of a Kind Financial Show Daily where I gave you the earnings education on how earnings are an audit of what the market expected. And if you beat and give good guidance, the market will reward you. If you report, don't meet the expectations and give bad guidance, it will not reward you. See, these old economy stocks, Coca-Cola, UPS, Boeing, are being bought. AI hardware stocks are being sold. Whether that lasts depends on what Microsoft says in their earnings, and then what happens with Microsoft, Meta, Apple, and Amazon later this week. Oil ease, giving the Fed some breathing room. Brent crude settled near $84 a barrel, down from over $100 last week. 10-year Treasury yield slipped lower, and the Federal Reserve continues its two-day meeting with the rate decision at 2 o'clock this afternoon, Eastern Time. Markets are pricing in about a 30% chance of a rate hike. Most economists still expect to hold in the 3.5 to 3.75 range. And oh no, we're going to talk dot plots on Thursday and Friday this week as Kevin Warsh comes out. Let's see if he actually trims his statement to fewer words than he did at the last meeting.
Be one of a kind with Mike's plan.
Now, the earnings on Tuesday tell a story worth sitting with. Coca-Cola beat handily. Revenue, $13.4 billion, up 7% year over year. Adjusted earnings per share of 97 cents versus 93 expected. Man, you want to talk about outperforming that audit? Unit case volume grew 5% globally, supported by World Cup marketing tied to the tournament played this summer. You think all those World Cup reports we were doing on the One of a Kind Financial Show Daily didn't leave little crumbs and hints of trails? Coca-Cola raised its full year outlook, now expecting roughly 5% organic revenue growth and 9 to 10% earnings per share growth. The stock rose almost 6% on the day to a record high. Message: the everyday consumer globally is still buying Coca-Cola. Volume growth of 5% is not a slowdown story. UPS, where they moved the things from here to there, also beat. Revenue at $22.8 billion, up 7.6 year over year. Adjusted earnings $1.76 versus $1.66 expected. UPS raised its full year revenue guidance from $89.7 billion to $91.2 billion. Domestic revenue was up 6%. Internationally, up 12.5%. Healthcare logistics generated over $3 billion of revenue, the second quarter in a row above that mark. Message: goods are still moving. And then Boeing. It was more complicated. Revenue of $24.6 billion, up 8% year over year, but the company still posted an adjusted loss of 76 cents per share, driven by another $280 million charge on the Air Force One program. The good news was cash flow. Boeing generated $631 million of free cash flow versus expected of $177 million cash burn. Message: the industrial recovery is real but uneven. Bottom line from those three blue chip companies: the American and global consumer is showing up. Volumes are growing. Cash flow is coming back. And that is the counter story to the AI stock sell-off. And that is why the Dow was up when the Nasdaq was down. And let's not forget the World Cup effect.
Be one of a kind with Mike's plan.
All right, here is something I did this morning that I do not do every morning. So if you don't listen to the Daily Show, maybe, and this is your first time, this is something that I routinely do about once every 2 weeks. I went to Google and looked at what the country was actually searching for, not what CNBC was talking about, not what Bloomberg was reporting, not what CNN or anybody else, what everyday people were typing in the search bar on July 28th, because that is where you see the actual stress in the American household. Top of the list, Netanyahu meeting with Trump at the White House. Their first in-person meeting since the Iran war. Second, Spain and France wildfires and the heat wave threatening Bordeaux with over 325,000 evacuations. My wife asked me an interesting question today, or yesterday at dinner. She said, do you think the rosé production will be impacted from the wildfires in Spain and France? That's what my wife is thinking about. Okay, so number one, again, Netanyahu meeting with Trump at the White House. Number two, the Spain and France wildfires and the heat wave threatening Bordeaux. Third, the Trump administration asking the Supreme Court to limit mail ballots. Fourth, Senator Rand Paul releasing over 1,000 pages of Anthony Fauci's pandemic diaries ahead of the Fauci Senate testimony. And fifth, updates on the shooting at the Bite of Seattle Food Festival that killed 3 people over the weekend. Now think about what those 5 searches actually are: war and Middle East policy, climate disasters and wildfires, voting rights and election trust, pandemic era memories being pulled back into court, and random violence at a family food festival. Not one of those 5 is a market story. Not one is an AI story. Every single one of them is a story about uncertainty, safety, and trust. The exact 3 things a retiree, a family, a small business owner wrestles with when they lie down at night. Meanwhile, on the market side, the machines are absorbing hundreds of billions of dollars in AI CapEx spending. The Fed is deciding rates today. Chip stocks lost hundreds of billions of dollars of value in a single morning. The average American is watching all of this and asking one question: what happens to me and my family if all of the dominoes fall the wrong way? Wow. That's why searching Google in the top-rated selections and how it applies to people's psychology versus what's happening in the market is so important. Here's what I want you to hear. The one-of-a-kind financial plan does not stop the wildfires. It does not decide the war. It does not vote on a ballot. It does not testify at the Fauci hearings. It does not stop the sell-off in chip stocks. It does none of those things. What the financial plan does is gives you a written document, clear, concise, and on paper that says, if the market drops 30% tomorrow, this is my paycheck. If oil goes back to $100, this is what still gets paid. If AI CapEx bursts, this is what stays intact. If the Fed hikes rates today, this is what happens to my income. If a family member gets sick, this is where the money will come from to care for them. And if I get the lucky enough news to say, I'm going to be a grandpa again, this is how my legacy gets moved. See, the stress is real, folks, but the plan takes the stress and gives it a floor. AI is not going to plan your retirement. The consumer economy is not going to plan your care. Google Trends are not going to plan your legacy. You are, on paper, with me, because we're not chasing returns. We're building the one-of-a-kind financial plan.
Be one of a kind with Mike's plan.
That's the show, folks. Wednesday, July 29th. Oh, wow, this month flew by. The market split between old economy and AI. Coke and UPS beat. Boeing swung on cash flow. The Fed decides at 2 today. And out in the world, the top of Google is filled with war, weather, and worry. The plan is the thing that turns worry into paper you can hold. If you want to build one of those plans, text the word IDEAS, IDEAS, to 600-700 or call our office at 757-909-7151. A couple weeks ago, I said estoy aprendiendo. That's Spanish for I am learning. So are you guys. Educate, coach, plan. It's my mission. Never miss a moment. It's how I live. I'll see you tomorrow.
Be one of a kind with Mike's plan.
This has been the One of a Kind Financial Show Daily. I am Mike Milligan. I am an investment advisory representative with Advisory Alpha LLC. Ideas by Mike. Doing business at One Oak Financial is an unaffiliated entity of Advisory Alpha LLC. This program is for educational purposes only and is not a recommendation to buy or sell any specific security. All market data is reported by the respective companies and exchanges. Past performance is not indicative of future results. Consult your licensed professional before making any investment decisions. I am a certified financial planning professional and the founder of One Oak Financial. All news was good as of the recording of this podcast.